stop what you're doing. You're about to see inside a real live coaching session where we trade live with our members, and you're going to hear their questions. You're going to hear their problems, different things, and different ways we address it. It's not a polished presentation. It is not a webinar. It is a real behind the scenes look at us working with our members to help them achieve their goals. Go ahead, stay all the way to the end. Absolutely do not skip anything, but I have to tell you, there is a great section on, I think we call it chapter 4. Patrick had a question about being up in a trade and then it reversed on him, and I give him some different ways to deal with that and many more. Just definitely stay to the end. If you would like to get more information about joining one of these kind of coaching sessions, go to the link in the description, and I'll see you next time.
2026. So I am going to, and actually, I'm going to go through a couple of things here. I got some stuff on the Dow here, and then I actually had an interesting interchange just a few minutes ago about a setup, and I thought I would actually kind of go through some of the particulars about it because I actually thought it was actually interesting because our buddy Brian Harris popped up something and we kind of had a different point of view on it, and his is perfectly valid, as is mine. And so I'm going to kind of go through the two different points of reasoning here. All right. So let me go through this stuff on the Dow here. Normally, the Dow is actually not my favorite instrument to trade. More often, I generally do prefer the NQ or really the S&P, because the S&P essentially is it's the big dog, right? It's the 70% of the market cap is that, and so the Dow is only a 30-minute, a third, is only 30 stocks. So I much prefer that. I much prefer the S&P. But having said that, when I don't find stuff, I will look at the Dow, and in particular, if it more or less kind of lines up with the same sort of price movement, then I'm okay. I just don't want to see the Dow totally out of sync with the S&P, because of the fact that more often than not, the S&P is kind of gonna lead the way. The Dow can be skewed by one or two stocks, versus the S&P, which of course is the big kahuna and 70% of market cap. So at any rate, so here's what I'm looking at on the Dow here, though. I was, doing my usual higher time frame analysis to begin here, and so right here we have a drop, a base, and a drop there. Pretty clear. In terms of the swing position, it's well above the halfway point. Just check this here. So here's the beginning of our swing right there. And then if we just pull that to there and then turn on the control, and so you can see right there, it's basically sitting, kind of, straddling that 1/3 mark. You can see it says 66.7. So it's essentially it's in the upper third. So that's pretty good. And so we can see right here we have our base drop here. Obviously, there's a fair bit of juice in here. If we just pull this thing all the way down, we can see that that certainly goes beyond 5 to 1 there. So that's all good. If we actually do the measured move here, okay, and then what I do is I just pull that, and I've shown this before. You just use the fib retracement tool and pull that from here down to the extent of the move before there's a major pullback. And so for me, that kind of takes you down to here. It does continue on down here, but having said that, that's a major move. If you consider the fact that this is a 3-hour chart, that's 3 hours of kind of, pull, essentially rally there before it then reverses. So for me, the major move here ends basically right at that lower wick there. So when you do that, that's where the measured move ends right here. And then the 50% mark sits right here, okay, at 52,802. Okay, so if you look right there, that's kind of giving you more or less clear permission to be shooting for basically about 2.25 to 1. So if you're looking for 2.5 to 1, essentially you're not being greedy. Okay, so 2.5 to 1, of course, lays out right there. In terms of structure, we have that very decisive red candle here, very, very bearish, obviously, predominantly body. And then within that, and let me just spread this out. And then obviously then we have indecisive candles here. These basically, a couple of these are more or less, kind of spinning top doji candles here, and that's a doji. And then right here, that's another indecisive candle. And then really the more or less the exit kind of starts with that. Okay, but it's all of a piece with the base. So I consider that all part of the base here. All right. And then of course right there we have a bearish candle there, and then of course that major thump down. Okay. So at any rate, that to me looks like a pretty decent setup there on the Dow here. Okay. Obviously going to need to wait for this. So there's that. All right. And you can see right here there is 150 ticks here. Okay, so that's how many that defines our risk at 50 cents per tick. That's $75 per contract on the micro. Okay, so in other words, if you're allowing yourself, let's say $250 of risk, that would allow you to trade 3 contracts on that. All right. So that's the story on in a sense, that higher kind of what I consider to be kind of a higher time frame, which is that those three kind of 3 to 4 hour charts. Okay, but I was also looking to see 3 to 4 hour charts. Okay, but I was also looking to see, okay, well, what might be here of interest that might get us a trade earlier. And obviously, I'm not just looking for the sake of getting a trade. Obviously, I need it to be an A or an A plus setup. And so my eye, of course, gets caught right here. If you notice right here, we do have an overlapping body and wick here. Again, we're looking at the 3 hour chart here. So, but there is you can see that there is an overlapping body and wick in here. So my eye immediately gets drawn to that. So what I'm going to do is then start to drop the time frame. I want to leave this thing intact here and not mess this up. So I'm going to go to a different chart here. And this is actually the chart that I typically use for sub 1 hour. Whoops. And also we'll talk about this in a moment here. So here was that there was that kind of that 2 to 4 hour. Let me just go back and just show you here, just so you can have your perspective here. So here's what we were just looking at on that other setup there. Okay, that. All right. So let me get that out of there, just so we're not distracted. Okay, and then, like I said, what I then wanted to do was see if we can find something that is that might give us something earlier. Okay, so right there is that overlapping body and wick that I was just talking about. So if we start to drop the time frame, and let me just circle the area here, just so we can keep our perspective here. And if we start dropping the time frame, we go to 2, we go to 1. Okay, you notice now the stuff is starting to flatten out there. If you notice also, we're getting a couple of overlapping bodies and wicks in here. And so it's pretty clear there might be something in here if we continue down here. Okay, so go to 45. And we go to 30. And we go to 15. And when we get to the 15, you notice right here that there is that clear break of where price just kind of thumps down right there. Okay. Price just kind of thumps down. And so really this is what represents the exhaustion of buyers that we always talk about. Okay, where again, if we think about the shares that are acquired by buyers, that of course is demand. We think of the shares that are offered up by sellers, that's supply. So right in here is where supply and demand are in balance, and then right here is where the exhaustion of buyers occurs, and then the whole thing goes out of balance at that point. Okay, and so in the 15-minute, that becomes, I think, an area of interest right there. And so let me just define. I was just going to basically just kind of define the general area, and then we'll refine this. All right. So let me just throw a couple of lines here just to get us going, and then we'll figure out how to how to really define this here. All right. Um, so that's 15. Let me just see what this looks like in the 30. See, nothing is laying out quite. Let me see what it looks like in the Magic 10. And actually, I think this might actually kind of more or less kind of do it. Let me just see what it looks like in the 20 here. Actually, I think that's actually the magic trick right there. So let me just spread this out a little. So we can very clearly see there's a drop, a base, and a drop there. Notice we have our decisive bearish candle, two indecisive base candles, and then two major thumps down there. Okay, so I would, using the paid version of the platform that allows us to kind of use, any time frame we want. You can certainly look at this though in the 15, and the 15 kind of gives it to you. It's just a little. In fact, really, it's right there. Regardless, in fact, really, I probably didn't need to really bother with that because if you really look closely there, you see there's your drop. There are those two indecisive candles, and then yeah, it just kind of it's not quite as pretty here, but it's the same thing there. Okay, but it really in both cases, the descent from here starts right there. Okay, so you have your drop, your base, and your drop there. All right, so there's your 15-minute. Question. Here are some things to consider. The candle is Iran
That's
news.
me.
Oh,
The look above is Patrick's questions. RN's me.
I didn't see the initial.
Yeah, yeah, that's me.
Yeah, well, at this point, isn't everything? We're just like at this point, it's like I'm almost going to throw up my hands. No,
Yeah, yeah,
seriously, it's just
yeah,
like
yeah.
because
I laugh because I agree with you, not because I'm like, criticizing or
yeah,
anything like that.
no,
Yeah,
no, that's yeah. So, but anyway, it does. Was there a specific headline, like a very specific? Because I mean, because obviously, ever since yesterday, um, you know, well, Spain's horrible, and Trump, and the Strait of Hormuz, and everything else.
no, he Patrick put up a chart of crude oil, and there's that giant ass oil 15
Yeah,
minute candle. He's in a trade from that. So I told him the only thing to consider is the Iran
yeah,
part of it,
yeah.
and it's news driven, not necessarily pure price action. And he's up a few bucks. I was like, stick to your plan, man. Trade's working, no need to interrupt it and just, see what happens. You could always be a little bit aggressive moving your stop to break even or something if you're okay with it. But for right now, it's doing its thing, see what happens.
Yeah, but leaving that aside, because obviously we're trying to get people to be able to do all this themselves here and to just figure out how to mark up these charts and everything. So leaving that aside, though, this is I think a pretty good, obviously structurally, I think a pretty decent setup there. It's a very clear. We have our, that's where your exhaustion of buyers occurs here, and this is the break between supply and demand. Okay, so that gives us an earlier trade. Okay, so just to go back, let me just see here. This is 52. This is basically at 53,000. And if we go back to the other one was at around 53, one, basically 1.4. So this basically gives us a trade about 140 points earlier than this one. And of course, one can either wait for this one, or, obviously one can take a swing at the thing that I was just talking about. And then, if that works and then eventually reverses, then you might have two trades. Obviously one doesn't know. And then to some degree, you have to figure out, what kind of trader you want to be and what your trade plan is. Interestingly enough, I am really going to be dedicated, at least over the next month, to being both kinds of traders. Because I'm actually running a couple of evaluations now, where I'm going to try to earn two more funded accounts. And what I'm going to do is one account is going to be dedicated for the higher.
Screen 3. Rid of that. And
The bottom line is he's looking at a 15-minute chart, and I would suggest that that needs to be looked at in a much higher time frame.
got it. All right. So first, let me get his.
In fact, I think I have a gold set up in there.
Yeah, I got some stuff I was going to talk about on gold anyway, so it kind of worked out. So, Patrick, if you're listening, here's your setup, right? And as Mitch was saying, the lens part, right? So you found this. That's freaking fantastic. That's great. And this big move down, everything here is good. The one thing that can tell you that you need to change the lens, where you marked up the lines, right? Notice all the candles there, right? As soon as you see that, could you leave it like this? You could.
Silly question. Are
Yeah,
you trying to show his setup?
yeah, you're not seeing it?
No.
Oh shit. Okay, so it's not just you. It's not just you. All right. Uh,
It's
all
not
right.
me,
Not
it's
your
you.
fault. Not your fault. All right. Yeah. All right. Let's go. Let's see if I can get it. Actually, let's just see because I never looked this up. I'm gonna do this just for
Actually, you know
you.
what? Why don't you
And
just
by the
bring up
way, if you do me,
gold and then just change it to a 15-minute chart and you can kind of reproduce what he did.
let's see if that'll work. Patrick, if you would start using the MGC contract instead of that XAU. It's nothing wrong with it if you're going to trade it, but if you're going to do like a an evaluation or whatever, you should have that. Be using that, not XAU. Okay, and I think it doesn't look the same at MJC, but on a 5 minute it does. So like the lesson will hold. All right. So here's where you were looking, for the similar idea, right? And you saw the move down, awesome. But then you saw all the price action there. You really should bump up the time frame to get rid of all the candles, right? So you go, let's say this is a 5.
Silly question though. Was he looking at that one or the one immediately above?
Um, since he's using XAU, I can't get it perfect.
Oh yeah,
You
yeah,
know that
okay.
like the pair,
All
it's
right,
gonna,
yeah, yeah.
it's 80% the same, 90% or so.
Yeah, no, I just
Not
meant was
yeah,
he looking at with the
yeah.
yellow, the higher yellow box?
Yeah, I'm not 100% positive.
Okay.
That was actually my trade I was going to talk about. So,
Yeah, yeah, no,
um,
I have the same one, yeah.
so going through it, just keep go until you could not lose the level, right? Go from like the 5 to 15 to like the 30, and then if it stops, but see, it's still kind of messy, right? And then I go to the 1 hour, and I believe it's going to look near perfect, right? And then you got yourself. You get rid of all the candles, you're down to just 2 candles, all the things you want. So like you could just stop when you see the picture you want. If you're good with the way it looks there, hey man, that's your prerogative, right? But if you like go to 15 to 30 to 60 and then you see a clearer picture, just let the time frame kind of guide you until you see the picture you want. And I'll get to Brian Harris's question in a second. But
Incidentally,
me,
I'm surprised you didn't hear me because I had that set up and I missed it by two ticks.
which one, this higher one or the
The gold setup.
got it.
For,
Got it.
41, I had it 41.82 and it went up to
Oh,
47.9.
fudge. Got it. Got it. Yeah, I was talking to Steve Cummings about it last night, and I was like, I got these two gold trades, And with the news and stuff, and I was up late last night, and there was he was talking on the plane, and he's like, there might be they made them close the windows, and they thought there was going to be this attack on Air Force One. I was like, I can't pull the trigger on anything. I got to just leave everything alone. It's just like too many news driven things are going to screw us until this is kind of settled, where we have stuff that we don't have to hold as long. So I had seen these two, and really, obviously, guys, that's a freaking monster right there. Look at that. But, I had this up here. Now I have to make a decision. That's the last thing I want to have to do. But luckily, doing nothing, I skipped out on a loss. But as Mitch was saying, he had this guy set up.
Yeah, well, this is the one that we were talking about yesterday, whether go for the one that's obviously pretty or go
Yeah.
for the one right behind it. And
Yeah.
that's why I was kind
And
of
in this,
suggesting.
and I'm assuming you had it on the 2 hour because it looks even
Well,
better
actually, I
on
don't
the
know.
two
See
hour.
if you can see if you can just click on that because you're always able to do this. I just put mine in the chat.
Yeah, and I don't know why I can't share it. That's so odd. I have it. I'm looking at it plain as day, right? It's right next to mine. So, all right, so that's good enough. But yeah. Oh my God, look at if guys, if you guys can't see, Mitch's entry is whatever a point. It
It's
went.
three ticks.
Wow, that is frustrating. That is
Yeah.
frustrating. And ideally, when it happened, you're burning time here with the Mitch is doing the eval part, and we for us in the PA accounts and the live accounts, it's the same deal. But giving up an hour, yeah, Patrick, just unmute yourself, dude. Go ahead. But giving up an hour, that really sucks because it could still get there, but
Well,
eh.
yeah, but now I'm not even sure if I like it anymore.
Good morning.
Now it's a good morning, man. 1 second.
Yeah.
It's a near miss. Like avoiding a near miss yesterday on ES also saved me a loss, and to a degree, everybody that I would have shared the trade with, a loss last night. The near miss, like just avoided it. Sorry, Patrick. I just wanted to finish my thought. Go ahead, man.
Yes, sir. Good morning. How you doing, Mitch, Ryan, everybody in
Hey,
the room? Here's also count a lot into the calculus as far as making a particular trade. And also another question is, when do you give up on a trade? Because I've and I guess maybe I shouldn't be watching the trade, but it's hard not to. I said, well, let me walk away and see what it does. But then, say like this morning, I was trading platinum. I was up by $300, then all of a sudden, I mean, within a second, it turned. And I saw on TradingView that there was a little asterisk that maybe there was some news that um, would somehow throw the trade the other way. But I don't know. I don't know as to why that trade went south so quick when it was going my way. Or maybe that's just the nature of the beast. But
Yep.
I guess
Yeah,
I
I'll
was
give you
just
a preview. Yeah.
yeah. So I was just wondering, when do you get out of a trade? I mean, I could be up by a couple dollars, but I don't want to just end the trade and then I look back at it like, oh man, I could have, if I'd have just stayed, true, I could have made, some more dollars. So I don't know. So yeah.
We don't know either. No. All right. Mitch, do you want me to answer that part first, then we'll do the wiki thing? Because or you have something you want to get to.
just uh, let me just give me 2 seconds here. I just want to let me just see if I can show something here. All right, so I just started a new evaluation literally last night. Okay, so I have not even had a trade in it. So I'm going to show you though how I structured this. I'm going to show you how I structured this oil trade that I missed. I missed on, and to some degree, this might address some of this. So here is the setup. Okay, as you can see, I got
Gotta share,
nothing.
Mitch.
Oh, sorry. Hang on 1 second.
And the other questions in the chat, we'll get to them. So like Brian Harris, Doug, like put some good stuff in there. We'll get to that. Let's just let's finish this out.
Okay. So this is my platform for the broker dealer Trade Evade. And this is what's, behind the Apex stuff. Okay. And I literally just started this process last night. So I have not had a trade. I should have had the oil trade, but I missed by 3 ticks. But if you notice right here, okay, I basically put on 4 contracts, and I actually have say so. Here are my two shorts at 41.48.2, and I missed by 3 ticks because it came up to 41.47.9. Okay, but if you notice, then here I've got two. And then here are my stop out points at 41.62. But if you notice here, I have two different targets. 41.13 and 41.27. I think 41.13 is approximately 1.5 to 1, and 41.30 is at 2.5 to 1. And so one of the things that you can do when you put on a trade, if in fact the instrument and the risk parameters allow you to do that, if you can have more than one contract on, then you can in fact set up, rather than setting up a single trade, divide the trade into 2 pieces and have sort of have what you might consider to be an unambitious and then an ambitious target, okay, or a more conservative target and a more ambitious target. So in other words, you can have it, let's say, a target like what I did here. I had one target at 1.5 to 1 and one at 2.5 to 1. Okay. And so that allows you to kind of get paid off on a piece of your trade and then have the other piece, obviously then still go. So at that point, you've already gotten paid off on a piece of it. And then at that point, particularly if you have access to your platform, you can then pull your stop to break even. Okay. So in other words, like on your platinum trade, how many, I assume you were just trading a full contract on platinum, right? So you just had like one contract on, is that correct, Patrick?
I'm pretty sure it was one contract, Mitch.
Okay. All right. So if it's one contract, then obviously then
Yeah,
nothing
yeah,
I'm
it
saying.
was. It was one contract.
Okay. Yeah.
Mitch.
Okay.
Yes,
So
sir.
yeah. So nothing I'm saying here obviously is germane to that.
No, no,
Um,
no, sir. No, sir.
but having said that, if particularly, that's one of the reasons why I love what by trading. That's why one of the things that I love about trading the instruments that have the micros, and particularly, let's say, things like the Aussie dollar and the euro, is it gives you the full flexibility to kind of mold the trade almost any way you want, because you have the flexibility. You could, let's say, have 10 micro contracts on, and you could put on 5 contracts on one target, five on another. Um, okay. The other thing is, and I can't talk about this now. Although I've shown this in a couple of previous sessions, and I'll kind of go through it again, maybe
Mhm.
at some point later this month. But there are certain techniques that we can use as a trade management tool in terms of, once you're in a trade, kind of managing it. If in fact you can look at the screen. Um, but and I've shown, kind of using like moving averages and that kind of thing, where as long as the price stays above a particular moving average, on a long trade, then you can stay in the trade. And if it breaks below that moving average, well, then that's telling you that, okay, well, maybe this thing is now turned and you should get out. So that's a trade management tool. So now you actually have a concrete metric, as opposed to just kind of like trading on emotion. And I'll kind of go through that again,
You
maybe
know,
in a
Mitch,
week or two.
one of the things also I noticed that when I'm in a particular trade, I'm hearing your voice while I'm in this trade, like proper risk management. And with a I'm still paper trading, but when I like one contract of platinum futures was, I mean, obviously very expensive. And the fact is that if I had proper risk management where I go into a trade and I know consistently what I'm risking versus reward, it would mitigate or offset my loss. For instance, so and I'm like, oh, okay, I see why you hammered that early on in the classes, that you really have to pay attention to proper trade management, risk
Risk
management
management.
as
Yeah,
well. Yeah,
because in fact,
it
before you worry about what you're going to make in a trade, you need to know what you could potentially lose in a trade. Uh,
gotcha.
But in fact, that's the cool thing about supply and demand, because once you have these zones, you know exactly what your potential loss is. But then that also defines what your potential win's going to be, and then you can just manage everything accordingly. So
Gotcha.
anyway, Ryan,
Um,
you want to
yeah,
go back?
real quick, Mitch, before we move on
Yeah.
to any charts or anything like that. He also talked about being in the trade and or I asked about being in the trade and it's going your way, and then it then obviously stops you out or gives up all the profit. That's just the nature of the beast, my friend. I hate to tell you there's like some super secret way, because there's only way that you can get around that is if you're willing to take a bunch of break evens, and it will frustrate the fucking hell out of you. Now you have to decide, are you okay with break even? Are you okay with the result? You just got to be okay. Like, hold on a second. I don't think she'll mind, right? If you, I'm going to say something, right? If you feel yourself just kind of like being a complaint, like a whiny bitch, like any of
Oh, geez,
that, right? Then you're doing the wrong
language.
thing. Yeah, yeah, yeah. I had to jump right to it. There is a lady here. She won't mind. She's a tough. Ruth is tough. But like, you just gotta accept it. You're gonna lose a lot of these. I had it the other night. I was in a trade. I went to bed. I was up a few bucks. I went and I went to bed. I woke up and I was freaking lost. Like what the hell, you know? So it's gonna happen. Gonna happen to the best of us. Just you almost have to accept that it's gonna happen, and it's gonna happen on a lot of your. I mean, I think Mitch has even talked about this. Majority, very few of Mitch's trades, or Mitch said his trades they start to work, and then if they fail, they fail. But like, there's no way to monetize that or like get anything out of it. You have to be okay with it. If you have some plan where you can do a couple of one-to-ones to pass evals or something like that, that's something Mitch and I are kind of always bouncing ideas around for everybody and trying to figure out if there's a way to uh, get through an evaluation faster, taking just like the bunch of ones to ones, not going for two and not going for three and stuff like that. There's a lesson there, but in real trading, like you can only adapt your trading to the prop firm rules for so long. And then like real trading metrics have to come in at some point, where like a bunch of ones and ones, you're just going to frustrate yourself, right? Whereas you need some really good high profitable trades to make a life out of this and stuff. It's prop is great. It's a great way to get started, and you definitely use it as a tool, and it's there for you. You should all do it. I highly recommend it. It can absolutely change your life. But you only want to like migrate your trading to those rules for so long. You kind of have to learn the really good, really strict rules, and then you see the ones you can like massage into what you're doing. But Patrick, just got to deal with it, man. You're just gonna have to accept like you're having trades, it's gonna go your way. And if you decide to change it and you decide to take trades early, just accept that you may see it go from you were up, you took a $300 winner and you were expecting a $900 winner. You closed it at 300 and it went to your ultimate 900. That's going to happen too. It's as frustrating of as a business as you could pick, right? And I don't know if there's one out there, the guys that own businesses and stuff like that,
Yeah.
that doesn't
Thanks,
have that.
Ryan.
So yeah, just wanted to give you that pep talk, man. Yeah. And don't try not to, when you feel yourself complaining too much in your private moments, okay, I've complained, it's over now. On to the next trade. Because if
Gotcha.
we were worried about just any, notice I don't really like, I have trades frustrate me a little, but you don't hear us like be like, it's kind of over and stuff like that, when it's
I mean,
done,
you're not a
right?
whiny little.
Yep, yeah, 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 yeah. I try not to be. I have my moments too,
So
guys.
it's a marathon.
I'm a
It's, it's,
human.
it's a marathon, not a sprint. That's
Yeah,
what it
yeah.
basically is. Just
And you got to get yourself into that, like just sometimes you got to give yourself that pep talk. We were trained by a guy who put a freaking mouse through a wall. Yeah. Because he got stopped out and his wife put a picture frame around it to remind him of like, taking an absolute fit, and this is a frustrating business, it just is what it is. Before actually I don't really have much to talk about because the gold.
Kind of lower
Yeah, right,
down.
right where oh, on the long, yeah, on the long, I was looking on the, yeah, like right in there, I think.
Yeah. All right. So why don't you grab the
All
screen?
right, let me grab the screen and then also, Brian Harris, you continue to surprise me, man. That is good. Your analysis, just going through the chat, is pretty solid, and then your MES trade, where the hell? Where were you looking on that? Oh, right in here. Okay, hold on one second. Let's take a look at what you. Team. 1 second, guys. I just want to go to the chat and then make sure I have the right. You guys obviously can't see it. Oh, you're on a 45. Okay.
Well, I was seeing your screen there.
What'd you say?
I said we're seeing your MES there.
I was looking for the chart, which you can't see
Oh, yeah.
that Brian Harris posted. Um, you're in at 75.76, so right where price is, I guess.
Yes, I was looking a little above that. I was like looking around 75, 80.
Yeah, like right here, Mitch, I guess. So like,
Yeah,
um, a little concerned on the neighborhood side that these wicks here
yeah.
are kind of an issue, but if you're if you're in it already, I mean, you got this giant drop here. I mean, the one I was looking at with the near miss was this guy last night that I didn't take and I didn't share, right? And it, started to work. Oh, this is a good example Patrick was talking about. Like I did see it start to work, and I was like, oh shit, I wonder if I was just wrong. And then bam, snap right through it.
That would have
And
gone. So that would have been. It would have probably been roughly at around 1 to 1, and
yeah,
then it snapped back. Yeah.
and I never would have taken unless I was watching it, but this is that's in the middle of the night. Which so I wouldn't have been. And even during the day, to be honest with you guys, unless something was up, I try to avoid the one-to-one trap, unless it's something I'm planning on. Like I said, I'm trying to develop like different things to help you guys get through evals faster, or like just talk it through like different ways for some of you guys that are like hot to trot on it. Overall, I think this is a solid trade. Uh, but Brian, sorry, I don't know what's wrong with me there. Just a little brain fart. But the region part, excuse me, neighborhood is a concern, but that juice level is pretty good. So good luck. I'm not in the trade, so I hope it pays off for you. Let me just get to MGC, and then I just want to review the chat, guys. So just hang tight because I want to make sure I didn't miss anything as
No,
far
I'm
as like
looking at. I'm
comments.
looking.
Oh, good.
Yeah, I'm
Okay,
looking at it
nice.
right here.
Um, so here's one. There's the near miss. If you still wanted to do this, Mitch, I wonder if you could just take a little bit more of a
Well, that was the th yeah.
conservative,
That's well. That's exactly what I was thinking.
yeah,
Is that but I figured I would just figured I would wait till the end after the session and then reevaluate the thing.
yeah,
Because then then you don't then whatever form but form below is going to be low enough where you can still get paid.
yeah. I like that. So that's not a, and that I mean, I think I said, maybe it was even Steve. I was saying the risk on gold is now spiked again because I had stuff that was like $200 and so on one contract of MGC. It really shouldn't be. This is only $78.
Yeah,
So,
this was less than 100. Yeah, yeah.
yeah, so this is pretty solid if you're, like if this comes down, I think that'll give you enough room to just say you use there. Right around the 3-to-1 mark, those wicks maybe
Yeah,
shouldn't
no,
bother
no,
you.
that was yeah. No, I figured was gonna didn't want to get too deep.
Gotcha. But that's a way to like maybe still um uh get the best of both worlds. It doesn't, and maybe just go in smaller contract size than you were originally planning. Although with your 250 now, I don't know what I got to run those numbers a little bit, but this is pretty good on MGC. YM, I had Mitch's YM trades. Joseph asked about 6B, and there was one thing I was looking at on 6. I was, I haven't traded currency set up lower than an hour. Shit, I don't remember the last time or it doesn't, maybe I have in the last year or so, but it's got to be a long time. But this is really nice on the pound here. Um, I thought we
Yeah,
were getting
actually,
a little
Brian and I were
closer.
having a discussion about it uh, this morning, where he's looking at it in the 45, and I was looking at it in the 15, and his analysis is spot on. But I looked at it in the 15, and I kind of really found like the launch point. So I was kind of going with that, and he's looking at it at a kind of a more aggressive point of more aggressive entry. Um, they're
I like
both are
that.
valid. It's just a question of what one
Yeah.
wants to do.
And you know what? Funny enough, like I almost like to trade more now because why did I miss that it's on a bunch of time frames? But like it's not just on the 15. I can feel a little bit more comfortable with it. And Joseph, I'm assuming you were looking down here because this is pretty solid. Um, I like this trade quite a bit. I'm a little bit more interested to it now that it's on, the 15 and the 45. Interesting. The 45 I think might be my favorite. Nah, I'm not gonna worry about that. Um,
But it's interesting if
supplies.
you just if
Oh,
you quickly look at it on the 15, um, you'll see precisely where supply and demand break down. That's where the launch,
yep,
right there at 33.66, I think. That's where the launch point is. So
yep,
that's
yep.
where I put my front line. And then I figured I would then front run it by like a couple of ticks from there. Um, and then put it like but like
Cool.
yeah.
And then the supply. You're dealing, Joseph. You're dealing with a tough. I like the supply zone. Just because we draw it one way doesn't mean the market wants to correspond. That near miss there on that wick. Uh,
Why not just use the extreme of the swing?
yeah. I mean, I kind of think you have to.
No, no,
I
no.
mean,
I meant go all the way to the top.
oh, to here?
Yeah.
Oh, I
Go
don't
to
know. I
the
guess that.
origin of the move.
I guess you could. Joseph, you're looking there or in that green one? If you're looking at that green one, I would be not excited about this just because that wick touch. But oh, okay. So where Mitch is talking. Okay, got it. Cool. So then I think you're okay. I don't wanna waste a bunch of time. For I guess that could count as a wall. That long ass wick there. But that ain't.
As I
Mm-hmm.
went higher up in the time frame, it seems that the consolidation zone looked a lot better than on the 15 minutes. So I was
Yep.
asking, based on what Brian had posted, and I think what Doug had asked. So when you're looking at a particular trade, should you start from the higher time frame, work your way back, or work your way up? And to that way, because at the 15 there's a lot of traffic. 30 it clears up. 45 clears up an hour. So I
The
don't.
answer is, Patrick, it depends. Because what's going to happen is it's not like in a perfect world, I kind of more or less start at the higher time frame when I just say I'm going to look at the pound, I'm going to look at whatever. But a lot of times what happens is you start to look at stuff, you happen to have a chart up, and maybe you just happen to be in the 15-minute time frame, and then you start to look at something, and then you go, you know what? Here's an area of interest in the 15, but there's just too many candles and it's too much of a mess. But I can see that there was a dramatic move out of it. So
Mhm.
at that point, then you're moving up in the time frame. But sometimes you may start in the higher time frame, and then it makes sense to drop it. So there is no hard and fast rule. But the bottom line is you want to get to the right lens, and you could be going in either direction.
Okay. Okay, cool. All right. Thank you, man.
Whatever cleans it up for you, too, is another way to think of it, Patrick. Just like whatever you find clear, right? There's no perfect. Just whatever you see it, and it doesn't leave like the. This is all about finding the picture. When you find the picture you want, you're good, right? Find the picture, it's clear to you. You've got, very specific um entry and exit, where you're going to put the stuff. There's not like a lot of crap hanging around. Like, a lot of traders, we're like, okay, well, here's my zone. There's a wick up here, so I'm going to put my stop up here. I mean, that might be fine, but that's a shit ton of risk right there. From an $80 risk trade to 300 or something like that. So you just gotta wherever it's clear and you can see it. There's no perfection. We all get ourselves into this thought process of trying to get like the perfect zone and eliminate losses and stuff like that. It all sounds great, right? And you chip away, right? You do. I think I've got it to the point where like I'm I always want to get better, right? But I know there's things I have to work on, things I'm going to improve on, and constantly, trying to get better at this myself always, like just chip away at like these little things, the game of inches. But as long as you can see it and it's clear, um, you're headed in the right direction and you're doing the
So,
work. That's the most important thing. But if you do the work,
right.
like, I've never seen anyone get it as fast as Brian Harris. So like, I have no,
He
I mean, I don't know that we did this
might be a
one comp.
prodigy.
It must be the
He's a
last name,
prodigy.
Patrick. Yeah. But we had a group years ago that we had a group of just studs and they all got it really fast and that, they sat in a room with us for 2 days. But you know, everyone's doing their part. You just, as long as you're seeing it, seeing it's most important, we can get you to the other, the freshness part, the profit targets, all that kind of good stuff in trade management. That's all got to come from just being able to see them. So, with that, folks, I don't have a ton else to talk about. Let's just make sure. Hopefully, Brian's trade's going along okay. Just about to get there. And see how I don't think. Oh, you know what? While you're still there, Patrick, you were looking here in Slack, the trade you posted, and I think that
Yeah.
was one you were talking about.
Hmm.
And right here, this is the one I was saying is news driven from the Iran stuff, right?
Oh,
So
gotcha.
that's the when only because I saw it that I knew that and you kind of know when something is a little bit larger than normal, and then you had that like so news driven. Is it real like were real trades done there, or is it just like a short term rip, right? And then I said the neighborhood is a little questionable over here, right? Where you just don't may not be concerned because you like the juice here, right? Now, okay, tree is kind of sloppy, so technically it did violate the zone a tiny bit. I don't know, it kind of looks like it just went right to the back and it's kind of just hanging out. You just if you're okay with any of those factors, take the trade. But if you're not, then you skip it, even though it looks amazing, right? But finding this and seeing it, it's just those other factors I happen to be on top of, and you just I had
So,
a
Mitch, what is the difference between an A?
you just I had
So,
a
Mitch, what is the difference between an A plus setup in your mind versus a B setup? What are the factors that would constitute a setup versus a B setup, or is there a confluence of other as you say
odds and answers.
enhancers like the doji? I
Yeah,
use the
no, no, no,
doji.
no. You know what? I think another special session. You just gave me a topic for it because that's a common thing that there's any number of anywhere from decent setups and up. And the point is, we want to go from decent and we want to go to essentially, kind of, excellent. And that would actually make a good session. In fact, I'll contemplate doing that. But in short, it's essentially something that recognizes and conforms to all of our core parameters. Um, I mean, hang on one second. Let me just really quickly, and then we're going to end this here. But let me grab just one thing here. Hang on. And this is stuff that you probably have seen already. Here we go. Seeing them.
We will, but now, Doug, we got the freshness special session, the A plus setup one, and I know a bunch of us want to or we want to do one on trade management. So we'll get to all these little by
We're
little.
we're full of topics.
Yeah, yeah.
Uh,
Were you going to share your screen, Mitch, and show something?
yeah, yeah. Hang on. So this is the thing that
Hmm.
was in the in our boot camp in our videos. And this was a part of it's in the educational portal now. But and
Gotcha.
in fact, I'm thinking of actually kind of redoing some of these. But this is kind of like a starter of kind of basically, what makes a really, really good setup. Okay. We start out, is the level fresh? And you can see I have it down here. It's mandatory. No setup if this isn't the case. Now, we've talked about that there are exceptions, but when we
Mm.
first get you guys going, again, I always talk about you need to know the rules before you can start to bend the rules or break them. So, is the level fresh? Okay. But really what you're starting out with is you want to know that there is a great deal of energy and a great deal of distance in terms of, what a level looks like. In other words, okay, you're looking for something, that kind of looks like that. Okay. So in other words, right there, here's your drop, base, drop. Okay. That's the origin of the move. And then right there, okay, then you work your way up and then you find the base. Okay. But the first thing that your eye should be drawn to is you're looking for that kind of you're looking for that breakdown, that exhaustion of buyers here, okay, where no one is willing to buy anymore here. And so essentially the sellers run down the price chart until they encounter willing buyers. Okay. But right there is the breakdown between supply and demand here. Okay. And then you work your way backwards and you say, okay, how do I define a base? Okay. When we define the base, what we want to do is we want to know that price didn't spend a huge amount of time in there. And so at that point, for whatever time frame you're looking at, you don't want to see a boatload of candles. Okay. So, everything is based on, a relative analysis in whatever time frame you're looking at. Okay. So you can't look at something in a 2 hour, in a 30-minute chart and you say, well, it all works out in the 30-minute chart, except there's too many candles. So I'm just going to pretend it's a 2 hour chart and then everything is great. No, if you bring it up to a 1 or a 2 hour, then you have to go through all of the analysis again to see if everything still matches up. Okay. But if you notice right here, price goes sideways and the base contains 4 to 6. Okay. But really, you really want to see 3 or less. Okay. That's the general broad parameter. Okay.
Mm.
And it's going to differ a little if depending on what time frame you're looking at. But again, this is just kind of the starter criteria. Okay. Then you want to know that price has gone a great distance. Okay. And so, we talk about the measured move and we talk about, how much juice there is in the level. And, and more often than not, we'd like to see at least 4 to 1 in in how much juice is in the level. So that if we're trying to get half of that, well, then that gets us into the territory of 2 or 2.5 to 1, and we're not being greedy. Okay, and again, and of course, we've talked about the measured move and all that stuff, and that's the purpose of that. Okay, so that's something else that leads you to an excellent setup. Okay, and then also when price comes back, okay, more often than not, we don't want to see a rocket ship coming up here. But on the other hand, we don't want to see price just creeping along, because if price just kind of creeps along, then you end up with a situation that looks like this. Okay, if this is your level, right, and you have your drop, your base, and your rally, okay, when price comes back, and let me just blow this up a little. Okay, if some sort of supply forms up here, well, then that's not a big deal for you because there's your 1 to 1, 2 to 1, 3 to 1. So you're okay if let's just say some consolidation forms up here. On the other hand, if it forms here, well, it's kind of on the border and you could still get away with this. On the other hand, if something forms like here, something forms here, that's kind of ruined your trade. So
Mm.
at that point, then you could have the prettiest looking setup, but when price comes back, that might just ruin it. Okay, so that's another element of what is going to kind of make an excellent setup is not
Mm.
having something forming that's going to kind of get in the way of your trade. And then there's the other things that I've talked about, the odds enhancers and the 88.6.
So that session was awesome. If listening to real traders talk through their problems, answer their questions, and you'd like to be in that room, that's exactly what we do inside the Precision Trading Lab. If you'd like to get more information about doing that and possibly joining the program, go ahead, go to the link in the description, click that link, schedule a call with me, and we'll jump on a Zoom, and I'll take you inside the program a little bit more and a little bit deeper and tell you all about it. Again, that link is in the description. Grab it, and I'll talk to you soon.